care. A lot of times they don't break down why you don't, but that's the reason why you don't, and that's because you don't have a tax liability. Your tax liability is zero. You don't have nothing that can be reduced, so now you don't qualify for the child dependent care credit. Versus somebody who say they make 30,000 and they only have one dependent. You don't get no personal assistance for your dependent anyway. But for instance, you'll be taxed on 30,000. Your standard deductions, say you had a household, is 18,000 some change. You take that 18,000 from that 30,000, it's probably like 12,000, 1,100, whatever the percentage of what a person with $11,000 get taxed on. Now they're telling you, say for instance, 10%, you owe $1,100. Well, now you have an opportunity to get your tax liability to zero because you can use your non-refundable credits, which is either one I'm gonna calculate. It's gonna either be the child and dependent care credit or the child tax credit. Now that $1,100 that you only owe 50, and then that other credit's gonna kick in, and you're not gonna owe anything. Now, mind you're not gonna get any of that money back. Well, you get the money that you paid in back, so that means that's how you get the money that you had withheld from your check back. But you're not going to get any additional money outside of that. So that's how the child care credit works, and that's why the actual refunds are lower for a lot of people, and that's why a lot of people were getting like 16,000 and 20,000 last year, because you got to think about it. Childcare is expensive. If a person had one child, or say they had two kids and they was in daycare and they're paying out $10,000 for instance in daycare, then what is that, about $6,000 additional money they was getting their refunds last year. And that's why this year it is totally, I mean